Hey everyone, welcome to our Asset Management Friday segment of the Passive Income Through Multifamily Real Estate podcast. I'm your co-host, Kyle Mitchell, also joined by Gary Lipsky. This segment is focused on educating operators, building better systems, and becoming a best-in-class operator. Since we're also live on Facebook right now, make sure to type in any questions you have in the comments section below. Also, be sure to check out our Facebook group, Passive Income Through Multifamily Real Estate. All right, today on the show, we have Nick Espanet. How you doing, Nick?
Doing great. Thanks for having me, guys. I really appreciate it.
Yeah, thanks for being on. And if you can start by telling the listeners a little bit more about yourself and what you currently do.
Okay, my name is Nick Espanet, and I am started syndicating apartments about 5 years ago, and have currently right now own 3 properties or co-sponsored them for a total of 452 units. We actually have another deal under contract that we can't accept new investors for, but looking to add a couple of properties a year is what we're working on. I come from, prior to real estate, I was in the healthcare world, but started looking for just other opportunities to my wife and I to place our retirement income, something that we could be more involved in, and started the path looking at single family homes. But the more we educated ourselves, the more multifamily kept popping up, and we saw the value of multifamily, plus realized that it wasn't just large corporations or REITs or that individuals could come together and purchase a fairly decent size apartment.
Well, Nick, thanks for coming on. I know you've typically asset managed properties in a tertiary market like Abilene, Texas, and which is different than managing in DFW because of the less resources. Can you talk a little bit about that from a vendor and staffing standpoint?
Sure, it is a challenge being out there. We've gone through almost every contractor in Abilene, only to come back. We bring a lot of vendors out of Dallas, out of DFW, which is a 2-hour drive, but we can put them up in a vacant unit or two. They bring air mattresses and actually like it better because once they're out there, those guys are focused and get their stuff done so they can get back to their home in DFW. Whereas some of our local contractors, we might see them for a day or two, then they're gone for a few days, and there's just not the competition where they'll go over and help somebody else out or kind of disappear. We've got 1 or 2 that we use, like our big plumbing company that if we have a decent sized sewer snake, but that on our properties. But if it's bigger than what ours can handle, we have a company that will come out. But we've done our not the property on now, the one before, we did a very substantial exterior facelift on it, and it was the crew was completely out of DFW.
And as far as other areas of asset managing, how does it compare? Kyle and I have done Tucson and Phoenix, and so we have a lot of great resources there. But maybe talk about how else it differs.
On the asset management side, it's trying to put together contractors. Our property management company handles the biggest part of that. So, but as far as it's a 2-hour drive for us to get out there. So we do have to make a plan to go and check on things, oversee things. We do have some boots on the ground. My father-in-law lives in Abilene, so I've had him go drive through a property when we were having some challenges with trash not being picked up like we wanted it. I'd have him drive through a couple times a week and just take pictures for me if there was any trash out. And then Brad Abbott, my business partner, his parents are also live in Abilene. They spend the summer in Colorado, but they spend the winter in Abilene. So they've been helpful. But, as far as going out to check, it's not like being here in DFW where I can drive 20 minutes to check on a property. We have to plan to go out there and follow through, we've had a challenge. We wanted to do food trucks at the properties. I've called 7 or 8 food truck companies trying to get somebody just to come, set up and for them to make money, but none of them call me back. It's kind of a little bit of a small town mentality at times. So that has been a challenge.
Does your underwriting change at all as far as lease up in a tertiary market? Typically we like to see 75% at least of being able to lease up on a yearly basis. So, 8 to 10 leases a month coming in on a minimum. Do you underwrite differently for these smaller markets where, they may not be able to get as much traffic, or do you just increase your marketing spend?
Our marketing's not, we don't have much product. So our lease up is not as challenging. What we do where we are more conservative versus DFW is on our annual rent growth. We use anywhere between like 1.5 on some of the older properties and 1.8% on our newer assets. And then we do build in a little more economic vacancy, about 1% more. So we take that from either CoStar or some other type of industry data and look more at the historical numbers. We're using 11% economic vacancy as our stabilized number, whereas the same property in Dallas or Fort Worth, we'd probably use 10%, maybe in the Phoenix area or somewhere in Arizona might use 9%. So we're building in a little more economic vacancy out there.
And as an asset manager in Texas, you have to deal with big increases in taxes and insurance. Can you talk about ways that you use to mitigate those increases?
Now, when we underwrite our taxes year one. We get a quote from a tax professional. Every county's different. Tarrant County, where I live, is one of the most aggressive. If I was looking at a property in Tarrant County, I'd probably use 95% to 100% of the purchase price times the mill rate. Versus in Abilene, we're using 75 to 80% in year one, but by year 3, we want to build up to close to 95% of what our purchase price is. That's with our first, look. Now, when we start digging into a deal deeper, we use our tax consultant, and she's usually pretty good at saying this county is going to go this route, and she's got us in close. Now, taxes, that's the last 2 years, there's been just a massive increase. And I don't know, anybody expected that, almost 20% increase in taxes. Now, this current asset that we're after, we are using those, the current numbers around $450 a unit for taxes. It's the deals we'd already purchased. We did build in some increase, but I don't think anybody was expecting a 20% jump in your taxes in the last 12 months. And if you did, you probably wouldn't have got the deal. And we're just having to, tighten the belt somewhere else, and it is going to hit the returns. So we're, going forward, we're looking at, we grow our insurance around 2% a year, just natural. It might be something to start tweaking. They like to think they've hit the top, but you never know. Another couple more hurricanes or tornadoes, and they may decide they're going to jump them up again.
I also know, Nick, you do some coaching on the side. What's the number one problem your mentees face when they come to you about asset managing?
I think knowing what KPIs to follow. What are the important numbers? Because it'd be nice if we could sit down and spend 8 hours a day digging through the numbers, but they want to come in and where can you get a quick picture of how the property's doing? And you definitely want to look at your rental, your collections and delinquency, other income collections, some, but more at your rental collections, how you're coming compared to the prior months, especially with COVID versus, a year ago, the year before. Also, and then your expenses, just tracking that you're not having any expenses, and expenses can be a little seasonal. So you got to keep that in mind, but kind of seeing where you're at for the year, and that, are you using more water because it's summer and the pool's being filled. And then that comes down to the NOI. And I really like, and I think this is something passives too, is look at the net income, because in the end, it's what's going in the bank is what's important. Your NOI can be great, but if you got a lot of your CapEx is overspending at that point, and you're not putting what you want into the bank, you're not going to have money to distribute, or you're not going to have money to make the debt payment. But just focusing on and one thing I like to talk about is looking at your traffic. Is your property getting traffic? And on our dashboard we get from the property management company, will show the net leases signed, like move-ins, move-outs in the next 30 days, in the next week, and tracking that's moving in a positive way. And something I didn't really start paying attention to until fairly recently is our work orders. How many overdue work orders? If your property's getting too far behind on that, and people are living in apartments because they want somebody else to fix their toilet, or their clogged sink, or and if it's not happening, you're going to get bad reviews. People aren't going to renew, or they're going to move out. So I think focusing on the work orders that are underway, and we have a set goal, and making sure we're staying close to what the goal is on the overdue work orders.
Nice. All right, Kyle, I'm going to pass it on to Kyle. Wrap it up.
All right. We ask every guest this last question. What is your asset management superpower?
Persistence. Just looking at the numbers. I mean, I love looking at the spreadsheets and coming up with I have Excel. I track work orders, overdue work orders, make readies, not units that are not ready, and just watching for trends as they start going up. And then I'm sure our regional, I try to be complimentary too, but I don't know that she likes to see emails coming from me. And I tell her, I'm like, look, I really don't want to have to send you emails, but when, if I'm seeing the work order not being done in a timely manner, I'm going to let you know if our collections are not where they need to be. I want to reach out to you, and I try to pitch it. We're all on the same team. We want to get this right. And ideally I would like to never have to send you an email. But I do look one of my Monday mornings, I type the name of our property and then go to the Google reviews. And I look if there's been anything in the last week. I screenshot it, and I like doing ones that are positive reviews and send it into the on-site manager and our regional and the other owners. I don't send them out to everybody, but the other guys that I co-sponsored with, and just say, great job, keep it up. Or, look, like right now we have one on one of our properties. It's not even anybody that lives there. It's that went in and, said, can we get to the bottom of why did this person give us a bad review, and then find out they're not even on our rent roll. So we don't know, things like that can be fixed too. But, trying to give some positive feedback to the staff, not just complaining to them.
Awesome. Well, Nick, we appreciate you coming on the show and talking to us a little bit about tertiary markets and asset management. If you could tell listeners where they can find out more about you.
Yeah. You guys, if you would like to learn more, we can set up a call. You can email me at Nick@Thrive Multifamily. So that's NIC, no K, at Thrive Multifamily, THRIVE multifamily.com. And I have a calendar link I can set back, or I'll send back to you, or we can just email back and forth. But yeah, I'd love to visit with anybody and, just let you know what we're doing and see if we can do something together maybe in the future. And I appreciate you guys having me on, Kyle and Gary. I appreciate it. I know you guys got a lot going on, and thanks for taking time out to have me on your show.
Yeah, perfect. We appreciate you coming on. Absolutely. And then to anyone listening out there, thank you for listening in. And if you could head over to iTunes and Stitcher, give us a like, subscribe, and review so we can continue to grow this podcast. That would be fantastic. And we'll talk to everyone next week. Hey, everyone. Thanks again for tuning in. We really appreciate your support. If you're interested in learning more about APT Capital Group and speaking to someone on our team, click on the link and schedule a call with us. We're here to help, and we'd be excited to speak with you and get to know more about you and your goals. Talk to you soon.